Okay, we are looking to take some trading positions based off this information just here. So I don't know what it's reacted to up here. I think these are all-time highs, so I don't anticipate this going anything other than up. I just want to find my opportunities to get into this particular trade. So I'm just gonna try and neatly map out exactly what I'm looking for. So the first thing that I want to look for is I'm looking to see if price is going to respect my high time frame 50. I use this high time frame 50 to see if there is another candle around about where another candle low is in order to set up my next range. So this next range is a way in which I can measure if price is going to respect the level or not. So we've just hit this medium term 50. Uh, I'll call it a bullish medium term 50. Bullish medium term 50. And my anticipation is that it should either respect this, and that. And that's kind of what I'm sold on. I believe that this will go up. So I'm happy to take. So I've got uh take two positions here. My stop, what's it worth? Undo. I don't think I need to do a handy. Do I? Do 50. This is too much. And then I'll take another position here. And confluence has been a bit of an indicator as to how things can actually go. Like it can be a good thing to see some confluence. So I believe that this is going to go up. It's got signs to show that it's going up, like based off some previous levels, like the hit of that. Lo and behold, what do you think it's going to be? The respect of a 78, right? So I used that particular measure. Yeah, that's fine. Not exactly, but close enough. And that's the way that the trade or the algorithm uses is used in order to disguise itself. So you see that first push and break behind, that's confirmation that we are going up. And then it really took out the 78. So I'm happy to continue to trade that up further. Now we're here. So I've taken two positions here. We'll move the candle forward. And we're going up. 8 o'clock market open. So we'll just see where we're opening up and what's happening. So what I look to do, in a nutshell, I look to see if the either the bullish or bearish lower time frame range, specifically the 78, is closed behind. If there's a close behind this area or this area, that exposes the next larger bullish or bearish range, 50 or 78. So if it respects this, that's a part of the trade. Is the risk is you just got to take the position once you're in that critical rejection area, that critical zone area where something can happen. So it's either the 50 or the 78. Sometimes it looks like it's a 61. It's for me the 61 is not one of the things I look to trade. It's the 50. I could put my stop behind the 100 or the 61. I like to put it behind the 78 because it could just go down there and reject. But that's what we're doing. Now, you see that price has come up and into behind the 50. We need to see if there's another candle, a bullish candle that'll close behind the 50 as well for it to continue going up. I suspect that this will continue to go. There we go. That's one, that's two, that's three, that's four, and we're winning. So I could choose to close this position here, or I can let it run. So the thing I'm not sure of is exactly where it wants to run to. So I can make my mind up to close this position now and just let it go. I don't imagine there's going to be a move for 100 that's going to get us up there. But I've closed one position. Um, uh, I don't need to risk 100. Let's just do that. I don't know what's going to happen next. I think it's probably going to come back. And the range is perpetually moving and changing. And I don't want to use words like oscillating, because it's not oscillating. It's just changing. It's constantly changing. Now it's here. Now we hit the 50. I want to see a rejection and a move back up. If I really want to be sensible, the best place to hide would be back here. But if it comes down around here, I'll just go again. I don't particularly care. I'll just go again. Here we go. So can you see that we're sitting right on the 50? Sort of. I'll take it. Take one. No, I'm not too fussed as to what's going to happen next. And instantly you get that rejection. Now, I really want to see a couple of bullish candles just close behind that 50. So we're on the 50. It looks like the 61, but it's not. Watch what happens. It's going to go down, right? Hit the 78. That to me is probably a strong sign that it's going to keep going down. So I might just unload a little bit here and just try and get into some other positions as it's coming down. See, it's coming down. So where are we? The 50s here. We're not quite below it, so there should be some type of rejection. Here we go. There's the rejection and the move up. So if I wasn't such a chicken shit, I could have held that and that could have kept going up. But the framework is there. I need to see respect of the 50, whether it's bullish or bearish, respect to the 50 or the 78 for it to continue to go up. For a change, the first signal of a change is a disrespect of either the bearish or bullish lower time frame 78. You need to see that. If there is a disrespect of the lower time frame 78, like we close behind it with a number of different candles, then this thing's going to go. Same applies to higher time frame. If there is a close behind here, like if there's candles behind here, I suspect that this is going to continue to go down lower. And you're wondering, well, where's it going to go to? The next biggest range. So if it closes behind here, it's likely to going to find some friction or some stopping around this level. And that's the way you got to kind of measure it out.